One of the stocks weighing on the market today was Ford. Shares dropped 8% after the automaker surprised investors with a drop in profits in the second quarter. It was well below estimates. The company also warning there's a risk that it won't hit its full-year earnings guidance. And as Phil LeBeau reports, that has investors wondering whether the great run for automakers is nearing an end.
Ford is tapping the brakes. After record-setting earnings in the first quarter, the automaker saw profits slow down between April and June, partially due to weaker sales in China, where local automakers have become more aggressive. But Ford's bottom line was also hit by higher incentives in the U.S., where the company spent more money to sell cars and trucks.
The bottom line is that we've seen a tougher pricing environment this quarter, and we will face one going forward. With the car segment the most impacted as various competitors look to protect their share.
This month, Ford's incentives are up more than 20% according to TrueCar.com. That's slightly ahead of Big Three rival Fiat Chrysler, but far higher than General Motors. Just last week, GM posted record profits and raised its outlook for the rest of this year. Proof GM's strategy of limiting production and fleet sales in order to push higher retail sales and a greater profit per vehicle is paying off. But if Ford is feeling pressure to raise incentives, will that eventually force GM, Chrysler, and other automakers to do the same? And could that kill one of the most profitable periods the auto industry has ever seen?
Historically, this industry has not been terribly disciplined when it gets really competitive and inventory start to climb and then incentives start to climb. I think this will be a big test in terms of how much discipline do the various companies have.
Automakers say they will stay disciplined when it comes to pricing. But historically, this is an industry that has struggled to keep rebates and incentives in check, especially when demand slows down and dealers are forced to spend more to lock in buyers. For Nightly Business Report, I'm Phil LeBeau, Chicago.